Yousef, I would like to start with the sealing of the Phase 1 trade deal between the US and China, and how much of an impact this already signed trade deal is going to have on the energy sector.
The signing Phase 1 of the trade deal between the United States and China has certainly led to a positive impact on the oil markets. As you have seen, there has been a very good price recovery from last week's decline that we saw WTI trading below 58. This week we see WTI reaching even 59. And one major reason was the certainty being drawn from the signature of the deal, the trade deal between the United States and China. That's one thing on the price effect. The other thing actually is also China will buy will be committed to buying a lot of petroleum and petroleum products from the United States, which will lead to a let's say an economic gains for the U.S. oil industry. And these are the two things that I think will have a very good consequence or a very good outcome as a result of signing the trade deal between the U.S. and China. The other thing is, now when we come to predict scenarios of a global recession, these scenarios will be less likely to happen, and we expect a better economic outlook for the year 2020. The fears of a global recession was very high in the year 2019. So these fears now will be much less of a concern compared to the year 2019. So as you know, markets always like certainty, and I think the deal between the first Phase 1 of this deal is a very good step forward.
On the other side, what is going on once again in the Middle East, this time in Libya and Iraq, is also very significant. For instance, a rebel group in Libya blocked a significant portion of the North African country's crude exports, forcing production cuts. And the images of the unrest in Libya and Iraq are also a little bit scary, that's for sure. So can we expect kind of supply disruptions considering the situation, or you think that Libya and Iraq are not Saudi Arabia? So, I mean, we cannot expect any supply disruptions.
Well, it's actually hard to predict about supply disruption coming out on the global oil markets. However, Libyan production is likely to decline. And it's expected that it will go down from about 1 million barrels to about 500,000 barrels a day as a result of the political instability going on in Libya right now. On the other hand, you have the OPEC cuts agreements in place. Today, OPEC has reported a compliance of about 145%, which has led to a slight decline in the prices because markets were expecting a slightly higher compliance rate compared to what OPEC has reported today. So I think that regardless of if there's going to see a supply disruption from OPEC, from Libya, this will likely to continue to support prices, preventing them from further decline. That's how I think will be the picture.
I was wondering, I know it's very difficult to predict or forecast any price range for the crude oil because it's been extremely, wild ride for the energy sector the last 2 years. But what can we expect according to your estimates?
The current scenario, as you see, we were predicting WTI to be trading slightly above $60 in Q1 2020. However, as you can see now, it's trading between 57 and 59. It's an average of about 58 over the past couple of weeks. And one thing is the reason for this slide, it's about less than by about $1.50 compared to our forecast, is the oversupply in the markets. The markets are actually well supplied, and it's expected that if OPEC meets again in March, there will need to be a slightly deeper cuts or extension of OPEC Plus agreements for at least the end of 2020. And these are the major reasons why we see prices currently trading for WTI below $59. Number one, the market is well supplied, and number two, there is uncertainty about extending the OPEC Plus agreement beyond March